you know a policy loan acts like a line of credit? By the end of this video, you'll have a definition of exactly what a line of credit is and how it's very similar to a policy loan. My name is Darius.
And I'm Carmen.
For the best infinite banking and financial advice, subscribe to our channel and hit the bell to be notified when we post new videos.
All right, Wealth Nation, here's the deal. We're going to define a line of credit so that we're all on the same page. So a line of credit is very similar to a loan that you would get at the bank. With a loan and a line of credit, either way, you are approved for a specific predetermined amount. But unlike a loan where you have to borrow all of the money up front, a line of credit gives you a little flexibility because you can either obtain all of the money or a portion of it. And with a line of credit, if you only use a portion of the funds, you still have the availability of the entire amount that you were approved for without having to reapply. Think of a line of credit kind of like a credit card, but in this instance, the rates are typically lower than credit cards. And when you repay the money, all of those funds are available to you to use again. That's why a lot of people like using lines of credit, because when you pay the money, you have it available again, and you can continue to borrow the funds and pay them back for as long as you have your line of credit.
And depending on the company that you're using for a line of credit, depends on the term in which that money will be available. So it's generally between 6 to 5 years.
The same way you would get a loan, credit cards, your checkings accounts or savings accounts, this is just another product that the banks provide to you where you have to apply in order to qualify for this product. Now with lines of credit, the thing to keep in mind is you are usually obtaining an unsecured line of credit. And what we mean by that, an unsecured loan, is when there is no collateral backed by this loan. And the collateral is simply the bank's guarantee that they will receive the payments.
Now, because this loan is unsecured, generally the interest rates are higher. And that's across the board no matter what type of loan you have. If it is unsecured, the interest rate is higher than it would be if it was a secured line of credit. Like, for example, your mortgage. That's how you're able to get such low interest rates, because it has collateral being your house.
Exactly. Car loans, things of that nature. And with lines of credit, you are typically going to pay simple interest. Now, if you don't know what simple interest is, then check out this video where we talked about the difference between simple interest and compound interest. Now, why do people usually get lines of credit? I'd say the first one is overdraft protection. That's something that we don't recommend that you do because you need to fix the bleeding, which is your spending habits, as opposed to dipping into your lines of credit to save that overdraft protection. But we do know people who use personal lines of credit for financing. We know people who use business lines of credit to finance their business. And there's another big one called a home equity line of credit, or a HELOC, where you literally get the equity in your house in a line of credit. All right, so I hope that wraps up a general idea of what a line of credit is and what people use it for.
Comment below if you have a line of credit and what you've used it for. Now that we've talked a little bit about what a line of credit is, let's talk about infinite banking. Infinite banking is the concept of using whole life insurance cash value in order to finance different things that you would normally finance through a bank. So when you pay your premiums on a monthly, semi-annual, quarterly, or annual basis, you accumulate cash value. Now, instead of taking the cash value out of the policy, which would be considered a withdrawal, you use the insurance policy as collateral to borrow from the insurance company. So here is where we have two distinct differences between a line of credit and a policy loan, because you are using the insurance policy as collateral. And because you haven't disturbed your money inside your policy, your money still continues to grow. Now, infinite banking is how you use the policy loan in order to finance your lifestyle. So infinite banking is the process of using those policy loans in order to finance your lifestyle. Now, with that said, let's break down the actual policy loans and how it's very similar to a line of credit. A policy loan, you can borrow all of the money that's available or just a portion of it, and you only pay interest on the amount in which you've used, which is a characteristic that's very similar to a line of credit. Another very similar characteristic is when you pay the money back to the insurance company, that money is available for you to use again. Now, what do people use policy loans for? They use it for personal needs, they use it for business needs, they use it for debt consolidation.
And investing.
There's a variety of ways you can use policy loans the exact same way that you can use a line of credit. It's a pool of funds that you have available at your disposal. You just have to make sure you're able to pay the simple interest in which you'll be charged for the funds that you borrowed.
And additionally, you need to make sure that you pay the loans back the same way that you would with your line of credit. Now, when you pay the loans back with an insurance policy, that doesn't increase your cash value because remember, where did you get the money to begin with? You got the money from the insurance company. So you're paying all of that money back to the insurance company, which, like Darius said before, opens up another pool of funds that allows you to continue funding whatever it is that you need to finance.
So one distinct difference between a line of credit and a policy loan is it does not affect your credit at all.
Good point.
Because a line of credit, some people use lines of credit for different strategies in order to increase their credit limit. But when it comes to a policy loan, it has no bearing or no effect on your credit at all.
So we hope that this video was very informative to you because a lot of people didn't realize that a policy loan can be used in the same exact way a line of credit would be used. And all we do is talk about moving money because when you move money, that's how you make money. So the infinite banking concept is a beautiful idea for you to be able to move money and create a legacy at the same time. So if you would like to obtain your own personal line of credit through infinite banking, then click on the link below to become our client. And if you like this video, give us a thumbs up, share, and subscribe.
And remember to own your own lifestyle.
Or someone else will.